Good morning, everyone. The time is 9:29 a.m. on 5/18/2015 market opening now. Trade to the upside identified by myself here, Jeff Killian, the Chief Market Strategist for the Insight Technician. On the upside, entry price here, 217 on the preferred level, a tick above 216.75. Now this is market opening. We are open. This will either be a shakeout to the upside with no follow through. Now we have no close at the preferred entry yet, so we have no go on the long side. Volume is average for the opening. One would take this trade to the upside now under the anticipation that it would follow through to the upside target here at 219.50, or if the move goes against you, you'd be out with a half a point loss, again just below the original ceiling here for superior resistance at 216.75. Time is now 9:31 a.m. Eastern on 5/18/2015. Very short move hit on a target for the scalpers based on the 6:01 a.m. bought at 06:01 hours at 5/18/2015. That open price was 217.75. That price has been hit. And again now MTM 217.50. It's 2117.25. So a quick scalp move could have been made this morning at that level. Price is holding fairly strong. Just a few seconds left within the current 1 minute bar. And now we have the completion of the shakeout. Price is moving back down. So one would be out at this point if you were still long and looking for an additional area to get back in. All we need right now is for prices to hold at or near this preferred entry 2117 flat or 2117 and 25. The possibilities of a long play for today to get to the target 2119 and 50. Long trades can be taken on market open as well as short trades on market open if there is a setup for the move. However, one must understand that if the trade does not go in the anticipated direction, it is nothing more than a shakeout before prices reverse and move in the anticipated direction that the smart money will control for the time of the session. Price is holding fairly strong, still at the 2116.75 area for the original ceiling and above, in fact, the preferred entry by between a quarter and a half a point. Now up 2117.75, mark to the market, moving up. Now, for those of you who have a wider stop for an increased risk of 3/4 of a point, there would never have been any need to get out of this trade whatsoever at the preferred entry price. Price is now moving up in the anticipated direction for the morning session. MTM 2118, 2117.75. Back up again to the scalpers area here based on this bar. Preferred target is 2119.50 based on the accumulated data points here. Anytime you're going to get back into a trade after the shakeout's taken place with the risk very limited, one would look to get back in after prices move up off of the support area, which was once resistance at this point right here. The best possible entry at 934, right after the open and up a tick at 2117 and 25. And the price is now moving back down on a failed try to follow through. Again, two opportunities. One at the preferred entry to get out at the scalp level here, and another right here on this bar's open once again to get to the scalpers area based on the 601 1 minute bar on the open at 2117 and 75. Now this is becoming a little more clear here that this could be a shakeout for this morning as the chart pattern develops, even though the current resistance level now turns to support. Is still being traded above. Now getting hit, eliminating the risk. If you were still long, you'd be out of the trade at this point and not give any money back. So in this case, for this example, for today's trading, once again on 5/18/2015, let's look at market opening, how to trade it. The scalpers area was clearly right here, as we identified earlier, and the target here. So as we take these trades and as we look at the opportunities there in front of us, we have two different opportunities this morning that could have been profited from, now turned back around. So the anticipated direction for the day, possibly even in again at this point, would leave a trader another opportunity to get from here up to a higher level. Two trades this morning possible here. Now we have the scalpers level based on the 601 point. Price is getting magnetized to that area and right back up here. As the market is now open at 938 and the direction for the day, which we anticipated would be to the upside, in fact happening as we speak. Now long-term holders with the stop of 3/4 of a point to a point looking to pick up 3 would never have been out of this trade. So in fact, the direction that's determined for the day has been correct so far, with the possibilities of getting all the way to 2119 and 50 on a rally, getting out to lock in profit. And we're just about there. And there you have it. A limit order would have you out at 2119 and 50 after the preferred entry price, guaranteed on the end at 2117 for a gain of 2 1/2 points on a single trade here. 2 3/4 of a point moves plus again in here would have gained you again 3 separate trades, 3 separate profits of even greater than 2.5 points. This is Jeff Killian, a Chief Market Strategist for the Inside Technician, reporting out to all traders this morning. We're going to wrap up the tape at 9:39 a.m. Eastern Standard on 5/18/2015. One more excellent trade identified by this methodology designed over 23 years ago now. For more information on anything that we can do to help your education to become a more profitable trader, just reach out to us at theinsidetechnician.com.